Welcome back. It is Monday, so that means we're checking in with Jeromy, our local CPA, for some tax tips. Jeromy, thanks so much for being here with us virtually.
Oh, happy to be here.
We are happy to have you. So today, there's some changes to depreciation for businesses. So what do our local business owners out there need to know for this upcoming tax season?
Absolutely. So we have, since 2017, we've had the option to, basically deduct the full cost of any trucks, vehicles or major equipment that businesses purchase.
Yeah.
And that's going to be changing starting this year. They call it a phase out of the deduction itself, or the rules itself. So this year it's going to be 80% allowed the first year, and then it's going to continue to drop down 20% for the next few years until it gets down to zero. So for 2024, it'll be 60%. 2025, it'll be 40%, et cetera.
Oh my gosh. So what do business owners kind of need to be on the lookout for? How is this going to impact how they file their taxes this year?
It's going to majorly impact them if they can't take this deduction. So last week we talked about credits and how tax credits can sometimes, and deductions, can sometimes be phased out based off of their income. So being able to deduct the full cost of a new vehicle or a new major piece of equipment in the first year reduces your taxable income by quite a bit. So that allowed a lot of people to take advantage of tax credits and deductions based on that reduced income. And without that, we might be not able to be eligible for those credits or deductions.
Yeah. Now, what about equipment? You sent me a whole list of kind of like bullet points. Let's go to the first one. Normal tax accounting for equipment. What does that necessarily mean?
So normally when you buy a vehicle or any kind of major equipment, right, it has a life of 5 to 7 years, or some assets have 15 years. It depends on the type of asset it is. Normally you would deduct that over those years. So instead of being able to deduct it in the first year, you're required to deduct it over several years. Okay.
And then let's go to the next one, the special bonus depreciation.
So this was the change we just discussed that started in 2017. We were able to deduct 100% of the asset that was placed in service since 2017. And that's the one that'll be phasing out 20% for the next few years.
It's a lot to take in for our local business owners out there. Oh my gosh. And how does this impact planning for the future?
For the future, it's going to be not being eligible to take advantage of some tax credits and tax deductions because their income is too high. Okay.
Oh my goodness. It's a lot to keep track of, all these changes out there that's coming up. Jeromy, if people at home have any questions, how can they contact you?
They can give us a call, 337-362-5005, or they can email me at jeromy@jbourquecpa.com.
Thank you so much for breaking this down for our viewers at home.
Oh, no problem. Anytime.
If you guys at home have any tax questions, you can find Jeromy on our website, klaf.com.